Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, November the 19th. My name's Eric Wilkinson, and sure enough, you might recognize me as the Wolfman from mainstream media. But what I'm here to do is not only talk about the economic data and what is going on in the economy like I do on TV sometimes, but talk about the markets as well, but more importantly, talk about how we can implement these options into our portfolios in order so we can increase that yield. Right now, we've got the markets always fluctuating back and forth. Is there a way to beat the S&P? Some people say no, but I say that it is, and I prove that by trading options in my portfolio. That is really the only way to beat the S&P in a portfolio, to be quite honest. Anyway, without further ado, let's remember past performance of any trading system or methodology is not necessarily indicative of future results, and then talk about the economic data across the pond. Nothing to see there. We did get industrial order expectations out of Great Britain coming in slightly better than expected, but still nothing to write home about, coming in at negative 26, expected to be negative 30, so it did beat on that. Then we moved back here to the United States, and we got building permits. A lot of people like to look at building permits, but it came in at 1.46 million units, or million and a half units, let's call it. But you can pull as many permits as you want. It just doesn't necessarily reflect whether or not you are going to build on them. But we did get the housing starts coming in at, in line with expectations at 1.3 million units there. And we also have Fed governors speaking today, and some good economic data coming out later on this week as well. On to the overall markets. Crude oil coming off by about $1.27. Am I the only one that believes so strongly in their directionality for crude oil that I hold off on buying gas and waiting for that direction to happen? Probably, even though it doesn't show up at the pump quite as often as it should, or as fast as it should. As the market goes up and all of a sudden our gas prices go up immediately. But I've been talking about this. I don't see the demand for crude oil right now, whether it's the consumer or in the manufacturing sector. And today we're starting to see that market come back down. So it might be a good day to fill up my tank and get off the fumes that I've been driving on yesterday. Anyway, crude oil coming back off, like I said, coming down and testing the 50-day simple moving average. That is going to act as support. And remember, we talk about this a lot, and that is the point of control for the markets. And right now we've got the point of control right here with crude oil, and that lines up just slightly higher. It's moved a bit to 56. It was down here at the 55-ish area, but 56, 57 is where we're seeing crude oil right now as a volume node. But I'm expecting the market to trend down a little bit and trade in the lower to mid 50s, so in and around this area, and build up this little volume trough and create a nice big volume node there. We haven't seen that kind of weakness, but I believe that once we start breaking out of this bit of a trend here, we're going to see the market come off into this area here. So it'll build up the volume node in those mid to lower 50s, and in the meantime fill in that area that I talked about right in and around here to create a nice big volume node right there at probably $55 a barrel. All right, so that's my soapbox. It's probably time to look to fill up the tank, though. And then we move over to gold futures. They're positive. The reason why they're positive today is because we're seeing some weakness in the equities. And what do we talk about when people are pulling money out of the more volatile aspect, or the riskier asset, which is equities? They put it into a safe haven like gold futures, or gold in general, and that drives the price higher. We're seeing gold up slightly today by about $1.50, $1.60, and trending back towards this value area high. Value area high is kind of where we are talking about here, value area high, and that will act as resistance despite the fact that we don't have anything in line with that. It does line up with that psychological number of 1,500. So that 1,500 is something that is in the back of people's minds, and traders will look for. If you're a bull, you really want to get that above it. If you're a bear, you're going to try and defend that. All right, bonds moving higher by about a half a point right now on the day, 159.09, and trending back towards that 160 area. The long end is doing much better than the short end. This is what we've talked about in the past, that I believe that the Fed may very well look to cut interest rates. We're going to see some great economic data on Friday coming out of Europe, and that is their flash purchasing managers index. That's going to give us a very good look into how the manufacturing sector is doing and how they expect that going forward. And that could very well be the determining factor for our pricing on our interest rates as well. All right, VIX upticking today, not into the teens, but it is upticking. Dow off the lows. It was down over 100 points earlier today. You can see we basically opened up on the day on the highs, and that is a new high up there of 28.90. That, remember, is something chartists look at on all-time highs. If it happens overnight, which we're going to see happen in NASDAQ and in the E-mini S&Ps, it's something that the market is going to want to come back and revisit. Now, I've talked about this. We have had this market in a steep up pattern and very tight range. I expect the market to at least test this area below, which is going to break that 2,800. I think we're going to test that and possibly move back towards the value area high here as a retest. So, that's several hundred points below us. I think that it will work itself out over maybe the course of this next month. Again, economic data dependent and tweet dependent these days, anything that's coming out in the media. But I do expect us to see a bit of a rollover here in equities. We are at the all-time highs. The Fed's trying to say that they're going to hold off. That's the market's trying to believe that they are not. But I think that there is a correction imminent in the next month or so. If we look over here at the NASDAQ, you can see this print of 83.79. That is not a very good print because it happened in the overnight session. As you can see here, we did get a new all-time high off of the open, but that was obviously below where we were talking about with this print overnight when we got the big rally. All right, so something to look at there. People are going to be looking at the chart as of something like this, and that to me is looking pretty bearish. Even if we start moving back towards the high, it's looking pretty bearish. If we maybe print the overnight session highs in there, then that's a little bit of a different story. But as of right now, to me, it's not looking too good for equities right now, and probably looking closer to what I was talking about. Maybe we'll see a little bit of a correction here and test some of the support and resistance or support levels that I've been talking about as a little bit of a correction here. You can see here with the mini S&Ps, again, very steep on the uptrend here and very tight. I'm not even drawing it as tight as it is, but that type of parabolic move in an economy that we're seeing is, I don't believe, sustainable, and I expect us to see this market start to roll back over to the value area high again. Okay, so yes, that is quite a bit below us, but maybe 50, 60 points below where we are right now. But I think that is something healthy that we're going to see happen. And let me see if this is the right one. So I think that we're going to see something happen where we come down and test this area, which lines up with that value area high as well in the market. So, that's the way I'm seeing it. The economic data we're seeing right now isn't super robust, and I think that we're going to see more of the equities kind of come to the realization that it's kind of a little overdone to the upside. All right, you can see with the breakdown of the 30-minute chart of the E-mini S&Ps, overnight high was printed. Overnight high was printed, and that did beat yesterday's overall high. We did get an all-time high today in the day session as soon as we opened up, But again, market rolled over, covered those longs that were created overnight. Anytime we got overnight inventory long, the day session really wants to slam it out. It's more bullish if they don't try and flush those guys out, but they did today. So to me, it's seeming a little bit more bearish because it's actually like the overnight inventory got flushed out and the market got short, which is bearish moving forward in my eyes, the way I'm reading the tea leaves here today. And then we go over to what have I done. Remember, I did this trade for the webinar and it was on the ratio put spread. It's more for a bearish to neutral type of assumption, but there's no risk to the upside. We add a little bit of risk to the downside, but by doing that, we eliminate the risk to the upside as part of my rules for building that strategy out, which is exactly what I did here with TLT. I kind of believe that, you know, the market was a little bit overdone to the downside, okay? So that was where my neutral stance came in. I was concerned about the market to push it a little bit further, you know. I always talk about how the markets like to overdo it to one direction or the other. I was kind of worried about the bonds overdoing it to the downside a little bit. So that's why I said, or I was under the thought process, not that I was worried about it. I thought that that was in the realm of possibility is what I should say. And so therefore I went in and did the December and sold the, I did the front ratio spread and did the DEES 133, 132. So actually I bought the 133 puts and then sold the 132 puts twice. And I got a collection of 83 cents for that. I think it was 88 cents for that. Well, you can see that that is a put spread. We added a little bit of risk, so we didn't want it to go too far. It did, you know, when I put that on a few days ago, I think I put it on the 8th, which kind of lines up in and around. Let me just get it exactly on the 8th here. You can see I did it right in this area right there on the 8th, which looked like it was not a very good bottoming pattern, but we did come down and test this 38 Fibonacci, and it lined up with 135, let's call it. So I did the 133s, which is the ones I bought, the 133s, and then sold the 132s, collected 88 cents. So my break even is just below the 132s, so 131.12, which is lining up with where this volume node is here. So I was, you know, under the guise that we might come down and test this volume node here. That would have gotten me to full max profit on this, but because I collected such a nice premium, the market moving higher allowed me to be directionally wrong and still make money. And that's what I talk about when we're setting up option strategies. The beauty in options is that you can be wrong and still make money. That's how you increase yield in your portfolio. You know, when you're going out and buying a stock, your odds are 50-50 whether or not the market's going to go up or down on any given day for you. And this way, we have those probabilities in our favor so that if the market moves away from us in our opposite our directional assumption, we can make money. And in this case, I was able to, because I was able to buy those back today for 13 cents. I mean, the beauty. What more can I say? I mean, perfect scenario of being wrong and being right at the same time. You know, they don't often get that when you're trading markets. And with options, you do have that ability when you set them up properly. So that's what we've done here. That's all I've taken off. I didn't add anything. I didn't play Home Depot today. All right, that's all I've done, you guys. Other than check out the webinars on Thursday. That's a great one. Like I said, it's really going into detail how to set up these option strategies to increase your probabilities of success. And if you can't take that, take it easy.